Welcome, curious minds, to the deep dive. Have you ever paused to think about those crucial numbers that define businesses? Maybe the ones often overshadowed by the familiar Social Security number.
hmm
We're talking about the Employer Identification Number, or EIN. Now, you might assume it's exclusively for, the behemoth corporations, the ones with sprawling campuses and thousands of employees.
Right, the big guys.
But what if I told you this seemingly niche number is actually a foundational piece of the puzzle for sole proprietors, complex trusts, even personal estates, and surprisingly often for individuals just looking to open a basic bank account for a new venture?
Yeah.
It's truly a cornerstone for so many different entities interacting with the IRS, stretching far beyond just traditional employers. Let's unpack this.
What's truly fascinating here is the sheer breadth of the EIN's applicability. It really functions as a gateway identifier.
A gateway, I like that.
It's absolutely essential for a surprising array of tax filing and reporting purposes, for establishing a proper business tax account. And often, people are quite surprised by how many situations demand one, even when they don't really see themselves as having a business in the conventional sense.
Our mission today, then, is to take this pivotal document, Form SS4, the application for employer identification number, which honestly on the surface looks like a pretty straightforward piece of paper,
It does.
and break it down line by line. We're not just going to tell you what goes where. We want to ensure you understand exactly what information is needed, why it's needed, and maybe most importantly, how to get it right the first time.
Oh, definitely.
Trust us, that last part can save you a mountain of potential headaches down the line.
This raises a really important question, doesn't it? Why is such meticulous accuracy so absolutely crucial when you're filling out Form SS4?
Yeah, why the fuss?
The answer is simple, but profound. This 9-digit number, once the IRS assigns it, becomes the literal backbone of your entity's tax identity.
The backbone, okay.
Any errors here can just cascade, causing delays and complications with virtually all your future tax filings, from your annual tax returns to critical payroll deposits. It's truly about laying a solid, compliant foundation for your entire financial journey with the IRS. Without it, you're kind of building on quicksand.
Building on quicksand, not a good place to be. And speaking of foundations, it's probably worth taking a moment to touch on some key updates to Form SS4, especially if you haven't looked at it recently.
Good idea. Things do change.
The latest revision from December 2023 has streamlined things quite a bit. For instance, the old Form SS4PR, which was specifically for employers in Puerto Rico, that's been absorbed.
Simplified.
Exactly. Everyone now uses the main Form SS4, or its new Spanish version, Form SS4 SPE, which is a nice accessibility improvement, actually.
It is good.
Also, for employers out there, you'll find that key publications like Pub 51 and Pub 80 have been rolled into the much more comprehensive Pub. 15, the Employer's Tax Guide, that happened starting with the 2024 version, making it more of a single go-to resource. So remember that crucial website, irs.gov Form SS4. That's your absolute best friend for finding the very latest official info and instructions.
That's such a critical point because the IRS is always updating, and relying on outdated information, well, that can lead straight to missteps.
Absolutely.
And beyond those specific updates, there are some really vital general reminders for anyone dealing with an EIN. First, this is a big one. You must keep your EIN information current with the IRS.
Must keep it current. Okay.
If there's any change to your responsible party, that's the key person who ultimately controls the entity, we'll talk more about them later.
All right.
Or if your primary business address or location changes, you're required to report those changes to the IRS within just 60 days.
60 days. That's a pretty tight window, isn't it?
It really is. It underscores just how important it is to stay on top of these administrative details almost as soon as a change occurs. You do this using Form 8822B, that's the change of address or responsible party business form.
Form 8822-B.
Got it. This seemingly small detail ensures the IRS always has accurate contact and control person information for your entity, preventing critical communications from, going astray.
Makes sense. Avoid lost mail, lost notices.
Absolutely. Another crucial point, one that often trips people up, file only one Form SS4 for each entity. Let me repeat that. Just one.
One and done.
Generally, if you're operating as a sole proprietor, you only need one EIN, even if you're running multiple different businesses under that same sole proprietorship structure, or if you're using several different trade names, those doing businesses names, or DBAs.
Okay, so one sole prop, one EIN, even with multiple DBAs.
Correct. You don't need a brand new IN just because you've launched a new venture if it's still legally part of your original sole proprietorship. However, and this is where it gets important, there are very specific instances when a new EIN is required.
The exceptions.
Right. For instance, if you decide to fundamentally change your business's legal structure, maybe you incorporate your sole proprietorship or you form a partnership. Each separate corporation within an affiliated group also requires its own distinct EIN.
So if I'm a sole proprietor, let's say I'm a freelance graphic designer, and I decide to bring in another designer to form a partnership,
Yep.
that immediately triggers the need for a new EIN because my legal structure has fundamentally shifted from a single owner to a multi-owner entity. It's not just a name change, it's a structural transformation.
Exactly. Perfectly put. And what happens if you apply for an EIN, but the deadline for a required tax return rolls around before you've actually received the number?
Oh, that sounds stressful. What do you do?
The IRS instructions provide clear guidance here. You should write applied for and the specific date you submitted your application in the space where the EIN would typically go on the return.
Okay, applied for and the date.
And this is critical. Do not use your Social Security number, your SSN, in place of an EIN on those business returns. That's a common mistake that can lead to all sorts of confusion.
Right. Don't mix personal and business IDs there.
Precisely. If a tax deposit is due perhaps for payroll taxes and you're still waiting for your EIN, you should send your payment directly to the appropriate IRS service center. Make sure you include your name exactly as it appears on Form SS4, your current address, the specific type of tax you're paying, the period the payment covers, and the date you applied for the EIN.
So you give them all the breadcrumbs to connect the payment later.
Exactly. This helps the IRS properly credit your payment while your application is still pending.
That's a fantastic real-world tip that could save someone from a late payment penalty. I can imagine a lot of folks might be tempted to just plug in their SSN there out of desperation.
It truly is tempting, but resist. Another vital limitation to remember is what's known as the 1 EIN per responsible party per day rule.
1 per party per day.
Okay. This applies universally across all application methods, whether you're applying online, by telephone, fax, or even mail. For trusts, this limitation applies to the grantor, owner, or trustor. For estates, it applies to the decedent or the debtor in a bankruptcy estate.
Why that rule? Just to prevent system overload or?
It's mainly to ensure fair processing and prevent issues that arise from multiple, potentially conflicting applications for the same entity or individual within a very short time frame. It keeps things orderly.
So you can't just keep hitting submit on the online application if you encounter an error message thinking you'll force it through faster. Patience is needed.
Precisely. Patience is definitely a virtue here. And finally, and this is a really foundational distinction, remember that an EIN is strictly for business activities. It is not a substitute for your personal Social Security number, SSN, or individual taxpayer identification number, ITIN.
Right, separate identities.
Your EIN is for your business's tax identity, separate from your individual personal identity. Maintaining this clear distinction is absolutely vital for accurate tax reporting and ongoing compliance with IRS regulations.
So you can see the EIN is clearly delineated from your personal identifier. It's like a completely different ID card for your business or entity.
Exactly.
Now, before we even dive into the actual lines of Form SS4, the fundamental question for many people listening is probably, do I even need one of these?
Right.
It's a very common starting point.
Mm-hmm.
Luckily, the source material, the IRS instructions, give us a pretty clear roadmap for figuring this out.
That's absolutely the right place to begin because the reasons for needing an EIN are far more diverse and nuanced than many people initially realize. Let's walk through the primary scenarios outlined in the official instructions, maybe add some real-world context for each.
Great, let's do it. Where do we start?
First up, if you've started a new business, now even if you don't currently have employees and you don't anticipate hiring them right away, you might still need an EIN.
Okay, how so?
This applies if your business is required to show an EIN on any official return, statement, or other document. A really common example here is a sole proprietorship. That's, an individual operating a business by themselves. Or maybe a self-employed farmer who decides to establish a qualified retirement plan, like a SEP IRA or a solo 401k.
Ah, the retirement plan trigger.
Exactly. Even though they might be a one-person show, the plan itself often requires an EIN for its own reporting purposes.
Interesting.
Another instance is if you're required to file federal excise taxes, specific employment tax returns that aren't triggered by employees yet, or alcohol, tobacco, or firearms returns. In those cases, regardless of employees, an EIN is a must.
Right.
And of course, if you're forming a partnership, a corporation, a real estate mortgage investment conduit, often called a MIRIC, which is a specialized investment vehicle or a nonprofit organization, you'll definitely need an EIN for any tax-related purpose right from the start, whether you have employees or not.
So just to clarify for our listeners, if I'm a self-employed consultant, a sole proprietor like in your example, and I decide to set up a SEP IRA to save for retirement,
Yep.
that act alone would trigger the need for an EIN, even if I'm literally the only person involved in my business.
That's absolutely correct. Your self-employment income would be reported on your personal tax return, usually on Schedule C, but the qualified retirement plan itself, as a separate tax entity for reporting purposes, will require its own EIN.
Got it. That makes sense. What's next?
Next, and this is perhaps the most obvious reason for many, if you have hired or will hire employees, this includes household employees like nannies or housekeepers.
The classic reason.
Exactly. If you don't already have an EIN, you absolutely need one to be able to file your employment tax returns, which cover things like Social Security and Medicare taxes withheld and paid.
Makes sense. Pay people need an EIN.
Then we have the scenario where you've simply opened a bank account specifically for business or other entity purposes. If the bank requires an EIN solely for this banking function, that's a perfectly valid reason to apply for one.
Even if it's not strictly a business.
Right. Think beyond traditional businesses here. This could apply to, say, a bowling league that needs an account for depositing member dues.
A bowling league.
Or an investment club that needs to receive dividends and interest and might need an EIN for proper reporting of that income to its members. It really broadens the definition of entity quite a bit, doesn't it?
It really does. A bowling league needing an EIN really drives home the point that an entity doesn't necessarily have to be a traditional profit-driven business to require this number. That's a key insight.
Precisely. Another common trigger for needing a new EIN is a change in the type of organization. This occurs when the fundamental legal character or ownership of your organization changes.
Like we talked about before, going from sole prop to partnership.
That's a classic example, yes. Or incorporating a sole proprietorship, transforming it into a corporation. This fundamentally alters the legal identity, thus necessitating a new EIN for the newly formed entity.
Okay.
However, it's crucial to understand that you don't need a new EIN if the existing entity only changes its business name, say Jane's Cakes becomes Sweet Delights Bakery LLC, but it remains a single-member LLC legally.
Just a name change, no new EIN.
Correct. You also don't need a new EIN if the entity simply makes an entity classification election on Form 883D2. That's the form to choose how you're taxed without actually changing its underlying legal character. For example, a multi-member LLC that already has an EIN and is taxed as a partnership decides to elect to be taxed as a corporation. It uses its existing EIN because its legal structure as an LLC hasn't changed, only its tax classification.
Ah, subtle but important distinction.
Very. Also, if a partnership technically terminates because at least 50% of the interests were sold or exchanged within a 12-month period, the existing EIN of the terminated partnership typically continues to be used by the new resulting partnership.
Okay, that's interesting. What about buying a business?
Good question. If you've purchased a going business, you generally need a new EIN for the acquired business. The main exception is if you acquired stock in an existing corporation.
Buying the shares versus buying the assets.
Exactly. If you buy the stock, the corporation's EIN remains unchanged because the corporate entity itself didn't change, only its ownership did.
Makes sense. How about trusts?
For those involved with trusts, if you've created a trust other than certain grantor trusts or IRA trusts that have specific exceptions, you will likely need an EIN.
Okay, likely. So there are nuances.
Definitely. There are key exceptions. Some grantor trusts that don't file using what's called optional method 1, and IRA trusts that are required to file Form 990T, the exempt organization business income tax return, must have an EIN. For other types of grantor trusts, if the trustee provides the name and taxpayer identification number of the grantor or owner to all payers, then an EIN for the trust itself might not be needed. This is a complex area, so reviewing the specific trust instructions is really paramount.
Sounds like it. Definitely need to check the details there. Pension plans.
If you've created a pension plan and you're serving as a plan administrator, you will need an EIN specifically for reporting purposes for that plan. This EIN is distinct from any business EIN you might have.
So the pension plan, as its own distinct reporting entity, gets its own EIN separate from the business sponsoring it, assuming it has a separate plan administrator.
That's typically the case for robust reporting requirements. Yes, it ensures clarity.
Okay. What about international folks?
Right. If you're a foreign person needing an EIN to comply with IRS withholding regulations, this often comes up if you need an EIN to complete a Form W-8. That's the Certificate of Foreign Status form, specifically for forms other than Form W-8 ECI. It's also sometimes required to avoid withholding on certain portfolio assets or to claim benefits under a tax treaty between your country and the U.S.
Ah, for treaty benefits or withholding issues.
Exactly. Entities applying to be a qualified intermediary, or QI, also need a specific QI EIN, even if they already possess another type of EIN.
Got it, estates.
If you are administering an estate of someone who has passed away, you'll definitely need an EIN to report the estate's income on Form 1041, the U.S. income tax return for estates and trusts. This ensures the estate's income is properly tracked and taxed as a separate legal entity.
Makes sense. What about withholding agents?
Also, if you are acting as a withholding agent for taxes on non-wage income paid to an alien, meaning you are an agent, broker, fiduciary, manager, tenant, or even a spouse who is required to file Form 1042, the annual withholding tax return for U.S. source income of foreign persons, you will need an EIN for that specific role.
So if you're responsible for withholding tax for a foreign person's U.S. income.
Correct. For state or local agencies, an EIN is typically necessary if they serve as a tax reporting agent for public assistance recipients, or if they have other reasons for needing one, such as, having employees themselves.
Okay. And LLCs,
Mm-hmm.
especially single-member ones.
Right. Single-member LLCs, limited liability companies with just one owner. While they are often disregarded for federal income tax purposes, meaning their income and expenses usually flow through to the owner's personal tax return like a sole proprietorship.
Right, the default treatment.
They may still require an EIN for various other reasons. For instance, if the LLC needs to file Form 8832 for an entity classification election, say, to be taxed as a corporation instead of being disregarded.
All right.
Or if it needs an EIN for filing employment tax returns or excise tax returns, or maybe for state reporting purposes that require a separate ID.
So even if disregarded for income tax, other taxes might trigger it.
Exactly. And a particularly significant reason now is for a foreign-owned U.S. disregarded entity needing an EIN to file Form 5472. That's the information return of a 25% foreign-owned U.S. corporation or a foreign corporation engaged in a U.S. trade or business. This is crucial for international tax compliance.
Ah, that Form 5472 connection is important for international listeners.
Yeah.
And just to tie it up neatly, if you're forming an S corporation.
You absolutely need an EIN to file Form 2553, which is the election by a small business corporation, allowing you to elect S corporation status. Now, if it's an existing corporation that's simply electing or revoking S corporation status, it would just use its previously assigned EIN.
Okay, so new S corp needs one. Existing one uses its old one for the election.
You got it. So, as you can clearly see, obtaining an EIN isn't just about whether you have payroll. It's about establishing your distinct identity with the IRS for a surprisingly wide array of activities, from something as straightforward as opening a simple bank account for that bowling league
Right.
to navigating complex international reporting requirements. Now, once you've gone through this checklist and determined that, yes, you definitely need an EIN, the next logical question is, how do you actually apply for one? What are your options?
Right. What are the pathways to getting this essential number? The IRS instructions lay out 4 distinct application methods, each with its own benefits and considerations regarding speed and eligibility. Let's walk through them.
That's right. The 4 methods are applying online, by telephone, by fax, or by traditional mail. Your choice will often hinge on how quickly you need that EIN assigned and ready for use.
Makes sense. Speed is often key. What's the fastest?
The online application is by far the fastest method available. If your entity has a legal residence, a principal place of business, or a principal office or agency located within the U.S. or its territories, you can apply online through the IRS website and receive your EIN immediately, like right there and then.
Immediately. Wow.
Yes, which allows you to use it right away for filing a return or making a required payment. However, there's a crucial requirement. The responsible party, that key individual we discussed, must have a valid taxpayer identification number, meaning an SSN, ITIN, or an existing EIN to use this online system.
Ah, so the person applying needs a U.S. tax ID already.
Correct. A really convenient feature of the online method is the option to view, print, and save your official EIN assignment notice directly at the end of your session. But, big caveat, if your entity has no legal residence, principal place of business, or principal office located within the U.S. or its territories, you are unfortunately ineligible to use the online application. You must use one of the other methods.
So it's immediate gratification, which sounds amazing, but it comes with a pretty clear geographical restriction, and the responsible party must already have a valid U.S. tax ID. That's a key distinction.
Exactly. Next, the telephone application method. This is now exclusively reserved for international applicants.
Only international now. Okay.
Yes. If your entity has no legal residence, principal place of business, or principal office or agency within the U.S. or its territories, you can call the IRS at 267-941-1099. Important note, this is not a toll-free number, so standard international calling charges will apply.
Good to know.
Their operating hours are from 6 a.m. to 11 p.m. Eastern Time, Monday through Friday. The person making the call must be fully authorized to receive the EIN and be able to answer all the questions on Form SS4 accurately.
So you need to be prepared.
Highly recommended. Complete Form SS4 beforehand. Have all your information meticulously organized and ready so you can efficiently provide it to the IRS representative. The IRS absolutely no longer issues EINs by telephone for domestic taxpayers.
Okay, phone is international only. Be prepared, not toll-free.
Yeah.
Got it. What's next? Fax.
The Fax10N program. This offers a middle ground in terms of speed. You can generally expect to receive your EIN back by fax within approximately 4 business days.
4 business days, not bad.
To use this, you simply complete Form SS4 and fax it to the appropriate IRS fax number. These are listed in the instructions, usually routing to the Cincinnati Service Center. These fax lines are available 24/7, though long-distance charges may apply depending on where you're faxing from. Crucially, you must include your own fax number on the form so the IRS can fax the EIN assignment notice back to you.
Makes sense. Need a return fax number and the slowest option.
And finally, the mail application method. This is the slowest of the 4, typically taking approximately 4 weeks to receive your EIN assignment notice by postal mail.
4 weeks. Okay. Need to plan ahead for that one.
Definitely. For this method, you need to complete, sign, and date Form SS4 and then mail it to the appropriate IRS address, also generally in Cincinnati, Ohio. This method clearly requires the most lead time.
So we have immediate online for eligible domestic applicants. International can call, fax for a few days turnaround, or mail for about a month. That's a very clear spectrum. But there's that vital caution you mentioned earlier that bears repeating. Use only one method for each entity.
Yes. To avoid receiving multiple EINs. It absolutely can cause confusion and unnecessary headache.
I bet. Dealing with duplicate numbers sounds like a nightmare.
It absolutely can be, and it's a common issue that's easily avoidable by simply sticking to one application method per distinct entity. Duplicate applications can lead to processing delays or even multiple EINs being assigned, which then creates this whole extra administrative burden to reconcile with the IRS. So choose your method wisely and then, wait patiently.
Okay. Choose one, be patient. Now for the main event. Rolling up our sleeves and walking through Form SS4 itself. Imagine you have the form right in front of you, pen in hand. Our goal is to make sure you know exactly what to put where and why it matters and how to navigate some of the trickier sections. This is where we really get into the nitty-gritty.
All right, let's start right at the very top with the essential identifying information. Line 1, legal name of entity or individual. This is required, absolutely required, and accuracy here is paramount.
Got to get the name right.
You need to enter the legal name exactly as it appears on official legal documents. For an individual, for example, it's your first name, middle initial, last name, just as it appears on your Social Security card.
First, middle initial, last.
If you're a sole proprietor, you actually use your individual name here, not your business name. Your business's trade name, or DBA, goes down on line 2. No abbreviations or nicknames are allowed here on line 1.
Okay, individual name for sole props on line 1.
For a trust, it's the name precisely as it's stated on the trust instrument. For an estate of a deceased person, it's the legal name of the estate. Or if there isn't one, the decedent's name followed by the word estate.
Makes sense. Partnerships. Corporations.
Partnerships use the name exactly as it's written in their partnership agreement. Corporations use the name from their official corporate charter or legal formation document. Plan administrators will enter their name, and if they already have an EIN from a prior role, they should use that existing number. For Indian tribal governments and enterprises, it's their full legal name.
Consistency with legal docs is key for line 1. What about line 2?
Line 2, trade name of business, if different from name on line 1. This is where you'd put your doing business as name, your DBA.
Ah, the fun name.
Right. But there's an important choice here. You must decide whether you'll consistently use the legal name you put on line 1 or the trade name you put on line 2 on all your subsequent tax returns and communications with the IRS.
Oh, so pick one and stick with it for tax filings.
Exactly. Inconsistency can lead to processing delays and errors, so pick one identity for tax purposes and use it consistently.
Got it. Choose your tax identity name. Line 3, executor, trustee.
Right. Line 3, executor, administrator, trustee, care of name. This line is used only in specific situations. For trusts, you'd enter the trustee's name here. For estates, it's where you list the executor, administrator, or personal representative. It's also used if the entity has designated a particular person to receive tax information on its behalf. Maybe if that person isn't the primary responsible party. You should enter that individual's first name, middle initial, and last name.
Okay, so only if there's a specific fiduciary or designated recipient. Lines 4A and 4B, mailing address.
Next, we have lines 4A, 4B, mailing address. This is the address where the entity will receive all its official correspondence from the IRS. Now, if you filled out line 3, meaning there's a care of person,
Right.
then you would use that person's mailing address here on line 4. For foreign addresses, you must spell out the city, province, or state, postal code, and the full country name. Again, no abbreviations allowed.
Spell out the country name fully. Good tip.
This mailing address will generally be the one the IRS uses on all your future tax returns, so it's really important to keep it updated. Remember our earlier point. Use Form 8822B to report any subsequent changes to this address within 60 days.
That 60-day rule again.
And if you're primarily filing Form SS4 just to obtain an EIN for a Form 8832 entity classification election, then use the address where you want the IRS's acceptance or non-acceptance letter for that election to be sent.
Okay. Lines 5A, 5B, street address, if different.
Lines 5A, 5B, street address, if different. This is for the entity's physical location. And it's important to note, you cannot use a post office P.O. box here. It must be a physical street address.
No P.O. boxes for the physical spot.
Correct. Similar to the mailing address, for foreign locations, you need the full city, province or state, postal code, and the complete country name.
Okay. Line 6, county and state.
Line 6, county and state where principal business is located. This just identifies the entity's primary physical location within the United States, linking it to a specific county and state. Pretty straightforward.
Gotcha. Now, lines 7A and 7B, responsible party. This sounds important.
It is. Lines 7A, 7B, name of responsible party, and SSN-EIM. This is arguably one of the most critical points of the form. The responsible party is defined by the IRS as the person who ultimately owns or controls the entity, or who truly exercises ultimate effective control over its operations.
Ultimate effective control. Sounds serious.
It means the individual who has the practical ability, whether directly or indirectly, to control, manage, or direct the entity and the disposition of its funds and assets. Now, unless the applicant is a government entity, which has a specific exception we'll get to, the responsible party must be an individual, a natural person.
Must be a person, not another company.
Correct. Not another corporation or organization acting as the responsible party. It has to be a human being.
So even for a massive, publicly traded corporation, the responsible party listed here has to be a specific human being, not like Parent Corp. Inc.
You've hit on a crucial point. For publicly traded entities or those registered with the Securities and Exchange Commission, SEC, the responsible party is typically the principal officer for a corporation or a general partner for a partnership.
Okay, specific officer or partner.
If, for example, a corporation serves as the general partner of a publicly traded partnership, then the responsible party of that partnership is identified as the principal officer of that particular corporation. For tax-exempt organizations, it's generally the principal officer as defined in the instructions for Form 990, their annual return.
Got it. And the government exception.
Here's the key exception. Government entities can, and often do, use an EIN for their responsible party. This would typically be an agency official who has the legal authority to bind the entity.
Okay. So governments can use an EIN here, but most others need a person's info.
Exactly. For trusts, the responsible party is the grantor, owner, or truster, the person who established or provided the assets for the trust. For decedent estates, it's the executor, administrator, personal representative, or other fiduciary managing the estate.
You need their SSN or ITN on 7B.
Yes, you must enter their SSN or ITIN on line 7B unless they are a non-resident alien ineligible to obtain either, in which case you can enter NA or foreign. And once again, remember Form 8822B to report any subsequent changes to this responsible party information within 60 days.
That 60-day clock keeps ticking. Okay, moving on. Lines 8A8C, LLC info.
All right, lines 8A8C. Limited Liability Company, LLC, information. An LLC is a business structure formed under state or foreign law that provides liability protection to its owners, its members. For federal tax purposes, an LLC is quite flexible.
Yeah, that's their big appeal, right? Flexibility.
Very much so. It can be treated by default as a disregarded entity if it has only one member, meaning its income and expenses are usually reported on the owner's personal tax return, or if it has two or more members, it's treated as a partnership by default.
Default rules. But they can choose differently.
Exactly. A key flexibility is that an LLC can also elect to be taxed as a corporation by filing Form 8832, the entity classification election. So if you check yes on 8A, indicating you're an LLC, you then enter the number of LLC members on 8B.
Okay. Number of members? What about community property states?
Good point. If it's a single-member LLC located in a community property state where the owners choose disregarded entity treatment, you still enter 1 on line 8B, representing the single disregarded member for federal purposes. Line 8C simply asks if the LLC was organized in the United States.
Simple enough. Any cautions here?
It's important to remember that you generally should not file Form 8832 if your LLC simply accepts its default federal tax classification. No need for the form if you're sticking with the default. Also, if an LLC is filing Form 25053 to elect S corporation status, that is, to be taxed as an S corp, it generally doesn't need to file Form 8832 in addition to Form 2553.
Why is that?
Because the S corp election itself on Form 2553 already dictates its corporate tax treatment, making Form 8832 redundant in that specific scenario.
Okay, saves a step. That makes perfect sense. No need for redundant paperwork. Now, line 9A, type of entity, this looks like a big one.
Precisely. Line 9A. Type of entity, check only one box. This section is crucial to get right, but it's really important to understand, as we noted before. Checking a box here is not an election for your tax classification. It's simply indicating your entity's fundamental legal form or the primary reason you need the EIN in some cases.
Not the tax selection, just the legal type or reason. Okay,
Yeah.
let's go through the boxes. Sole proprietor.
If you are a sole proprietor, you check this box if you file Schedule C, profit or loss from business, or Schedule F, profit or loss from farming, with your Form 1040. Also check it if you have a qualified retirement plan that requires an EIN, or if you are required to file excise, employment, alcohol, tobacco, or firearms returns, or if you're a payer of gambling winnings. You enter your SSN or ITN. If you're a non-resident alien with no effectively connected income from U.S. sources, you can enter NA.
Okay.
For a corporation, you check this box for any corporation that isn't a personal service corporation. You must then indicate the income tax form number you'll be filing, like Form 1120 for a C Corp, or Form 1120S for an S Corp. Remember, if you indicate 1120-S, the corporation must also file Form 2553 to officially elect S corporation status. Until that election is approved, the IRS considers it an 1120 filer.
Got it. Personal service corporation. What's that definition?
The personal service corporation has very specific criteria. Its principal activity must be the performance of personal services substantially by employee owners, and those employee owners must own at least 10% of the stock. Think services like accounting, law, health, engineering, architecture, actuarial science, performing arts, or consulting.
Okay, specific service types and ownership rules.
Other nonprofit?
If you're another nonprofit organization, you check this box and then explicitly specify the type of organization. For example, educational organization, charitable organization, or religious organization. If you're seeking tax-exempt status under 501c3 or similar, you'll also need to file Form 1023 or 1024 separately. All right, this form doesn't grant tax exemption.
Correct. If your organization is covered by a group exemption, you'd enter the 4-digit group exemption number, or GEN. Section 527 political organizations also check this box, specifying Section 527 organization, and may need to file forms 8871 and 8872.
Okay.
Estate. For an estate, which is the legal entity created upon a person's death, you check this box. You'll also need to enter the decedent's SSN or ITIN on this line.
Plan administrator.
A plan administrator applying for an EIN for the plan will check this box and enter their own existing TIN if they have one.
EMIC.
A REMIC is a real estate mortgage investment conduit, a specialized entity primarily holding mortgages. Check that if applicable.
State local government.
State local government entities are those with characteristics like the power of taxation, law enforcement, or other civil authority within a defined geographical area. Check that box.
Federal government.
Federal government refers to branches like the executive, legislative, and judicial, as well as independent agencies of the U.S. government. This does not include private organizations like unions or Veterans of Foreign Wars, VFW posts, even if they have federal charters.
Got it. Indian tribal government.
Indian tribal governments enterprises applies to governing bodies exercising governmental functions or tribal enterprises that are not recognized as separate for tax purposes.
Okay, that covers the main boxes. Now the other box, this seems like a catch-all.
It is, and it gets a bit more specific for certain entity types that don't fit neatly into the predefined categories. If none of the listed boxes above apply to your entity, you check Other, and then clearly specify the type of entity and any return you'll be filing. For example, you might write Common Trust Fund, Form 1065.
Okay, so other needs details. What are some common other types?
A household employer, an individual employing household staff, like a nanny or caregiver, should check Other and explicitly write Household Employer, along with their own SSN. If a trust is acting as a household employer, the trust uses its existing EIN, not the individual's SSN.
Distinction between individual and trust as employer.
Okay. A household employer agent may be someone acting as an agent for disabled individuals or welfare recipients who receive home care services would check Other and specify household employer agent.
Got it. Q-sub.
For a Q-sub, which is a qualified subchapter S subsidiary, you check Other and simply write Q-sub.
Withholding agent.
And if you are a withholding agent required to file Form 1042, you check Other and enter Withholding Agent.
Wow, that's a deep dive into the other category. It really shows just how many specialized scenarios this form covers. It's incredibly granular.
It certainly is. And within this other section, the rules for disregarded entities on Form SS4 are particularly important because they are such a common structure, especially single-member LLCs.
Right. Let's clarify those again for the form.
Okay. Remember, a disregarded entity is generally treated as not separate from its single owner for income tax. However, these entities often still need their own name and EIN for employment taxes, excise taxes, and for filing specific forms like that, Form 5472 if it's foreign-owned.
So how do they fill out Y9A?
It depends why they need the EIN. If a disregarded entity needs an EIN for employment excise taxes or for non-federal purposes, like a state requirement, you check the Other box and write Disregarded Entity. If it's owned by an individual, you can specify Disregarded Entity Sole Proprietorship. If the disregarded entity specifically needs an EIN to file Form 5472 because it's a foreign-owned U.S. disregarded entity, you check Other and write Foreign-owned U.S. Disregarded Entity Form 5472. This is really important for that compliance piece. Now, if the disregarded entity is electing corporate status wanting to be taxed as a C Corp or S Corp by filing Form 8832 or Form 2553, you actually check the corporation box on line 9A. Then you write single member along with the specific form number you'll be filing, either 1120 or 1120S. If a disregarded entity acquires new owners and by default becomes a partnership for federal tax purposes, you would then check the partnership box reflecting its new status. And if a foreign eligible entity is electing disregarded status on Form 88382, you check Other and write Foreign Disregarded Entity.
That's incredibly detailed and quite a journey through the disregarded entity nuances. It definitely highlights how critical it is to truly understand your entity's classification and why you need the EIN, because it dictates exactly how you fill out this crucial line.
Absolutely. Getting line 9A right based on your specific situation is key. Now, line 9B. If a corporation, name the state or foreign country where incorporated, this is straightforward, but required if you checked corporation on line 9A. You simply state the jurisdiction, the state or country where your corporation was legally formed.
Easy enough. Line 10, reason for applying. Another, check only one box.
Correct. Line 10, reason for applying. Check only one box. This is another required field. You cannot simply enter NA. You must select the primary reason for your EIN application.
Primary reason. Okay, what are the options?
Start a new business. Check this if you are launching a brand new business. You should also specify the type of business, for example, retail clothing store or web design services. You generally don't check this if you already have an EIN and are just opening an additional location for an existing business. Hired employees. Check this if your existing business is now hiring its first employees and needs an EIN specifically for employment tax purposes. Again, you don't apply if you already have an EIN and are just hiring more staff. Checking this box also implies you'll likely need to use EFTPS, the Electronic Federal Tax Payment System, for your federal tax deposits. Banking purpose. Check this if your primary reason for needing an EIN is solely for opening a bank account or for financial reporting, and then specify the purpose, like our examples, bowling league for dues deposit or investment club for dividend reporting. 5. Changed type of organization. Check this if your business is undergoing that fundamental change in its legal structure. As we discussed, from sole proprietorship to partnership, or from partnership to corporation. Specify the change. Purchase to going business. Check this if you acquired an existing business from a previous owner. Remember the exception. Don't use the former owner's EIN unless you specifically acquired stock in their existing corporation. Created a trust. Check this box and specify the type of trust, like non-exempt charitable trust or irrevocable trust. Be mindful of the exceptions for certain grantor-type trusts. Importantly, you do not check this box for a trust that's created when a new pension plan is established that has its own specific box. Created a pension plan. Check this if you have newly established a pension plan and need an EIN specifically for reporting purposes related to that plan. Specify the type of plan, like defined benefit plan or 401k plan. If you are applying for a trust EIN when a new pension plan is established, you check this box and also check the other box on line 9 and write created a pension plan. Other. If your specific reason for applying isn't explicitly listed, check this box and provide a clear, concise explanation. For example, newly formed state government entity, or as we saw, foreign-owned U.S. disregarded entity filing form 54722.
So clarity and specificity are absolutely key on line 10. It sounds like you really need to articulate your exact situation to the IRS very clearly.
Indeed. Now, line 11. Date business started or acquired, month, day, year. For a brand new business, this is your actual start date. For a business you've acquired, it's the acquisition date.
What about trusts or estates?
Trusts enter the date they were funded or the date an EIN became legally required. Estates enter the decedent's date of death or the date the estate was legally funded. For foreign applicants, it's the date the business began or was acquired in the U.S. If you've changed your form of ownership, it's the start date of that newly formed entity.
Okay, line 12, closing month of accounting year. Tax year end.
Exactly, line 12, closing month of accounting year. This refers to your tax year, the 12-month period you use for keeping your books and reporting income. Most individuals and many small businesses use a calendar year, ending December 31st.
But others use different years.
Right. Other entities might use a fiscal year, which is a 12-month period ending on the last day of any month other than December, or maybe a 52, 53-week tax year. There are specific rules. Partnerships typically align their tax year with the majority of their partners, or choose a year with the least income deferral. Aramix generally must use a calendar year. Personal service corporations also generally adopt a calendar year unless they establish a valid business purpose for a different year or make a special Section 444 election. Most trusts also generally use a calendar year, with exceptions for tax-exempt, charitable, or grantor-owned trusts.
This line definitely reminds us that the EIN is just one piece of the larger tax compliance puzzle, setting your annual reporting cycle with the IRS. It's a fundamental decision.
Precisely. Next, line 13. Highest number of employees expected in the next 12 months. You need to estimate and enter the number, even if it's 0, in the relevant categories. Agricultural employees, household employees, or other employees. If you genuinely expect to have no employees in any category over the next year, you simply enter 0 for all.
And if you put 0 for all,
then you can skip line 14.
Okay, so line 14 is only if you expect employees. What is it?
Line 14. Do you want to file Form 944? This is a significant choice for small employers, and it can simplify your payroll tax filings quite a bit.
Form 944, annual instead of quarterly, right?
Exactly. You're eligible to file Form 944, the employer's annual federal tax return, instead of Form 941, the employer's quarterly federal tax return, if you expect your total employment tax liability for the full calendar year to be $1,000 or less.
How much wages is that, roughly?
Generally, that translates to paying total wages of about $5,000 or less to all employees, or $6,536 or less in U.S. territories due to different tax structures. If you qualify and you want to file annually to reduce your administrative burden, check this box. If you don't check it or don't qualify, you must file Form 941 quarterly.
Seems like a good option for very small payrolls. Any catch?
The important caution here is that once you check this box and are approved by the IRS to file Form 944, you must continue filing Form 944 annually until the IRS specifically instructs you otherwise, even if your liability goes up slightly in a later year. They'll tell you if you need to switch back to quarterly 941s.
So it's a commitment once made until the IRS says differently.
Yeah.
Good to know. Line 15, first date wages paid.
Line 15. First date wages or annuities were paid, month, day, year. If your business has employees, this is the actual date you began paying wages or annuities.
Oh.
If you have no employees currently and don't expect to pay any soon, simply enter NA.
What about withholding agents?
For withholding agents needing an EIN for Form 1042 purposes, this would be the date income, including annuities, was first paid to a non-resident alien subject to withholding.
Okay. Line 16, principal activity. Broad category.
Yes. Line 16. Principal activity of your business. Check one box. This is a required field. You choose the broad category that best describes your business's main activity. The options cover a wide range, like healthcare and social assistance, construction, retail, manufacturing, finance and insurance, accommodation and food service, real estate, rental and leasing, transportation and warehousing, wholesale, and other.
So line 16 is the broad brushstroke of the general industry, and then line 17 gets more specific, right?
Exactly. Line 17. Indicate principal line of merchandise sold, specific construction work done, products produced, or services provided. This is also required and asks for much more detailed information than line 16.
Give us an example.
Sure. If you checked construction on line 16, you might enter general contractor for residential buildings here on line 17. If you chose real estate for a mortgage REIT, that's a real estate investment trust investing in mortgages, you'd specify mortgage REITs. If it was an equity REIT owning property, you'd indicate the specific type, like residential REIT or office REIT. This helps the IRS really understand the specific nature of your operations.
Got it. More detail paints a clearer picture for them. Line 18, previous EIN.
Line 18. Has the applicant entity shown on line 1 ever applied for and received an EIN? Yes. No. This is a straightforward but important final check for the entity itself. If you answer yes, you must write the previous EIN in the space provided. This helps the IRS track prior EIN usage and link related entities, especially if there have been business structure changes or reorganizations.
That's a good final check, ensuring consistency and preventing accidental duplicate EINs for the same core entity. What about the third-party designee?
Right. Finally, there's the third-party designee section. This is completely optional, but it can be very useful, especially if someone else is helping you prepare the form.
How does it work?
If you choose to complete it, you are officially authorizing the named individual, maybe your accountant or lawyer, to receive your EIN directly from the IRS, and importantly, to answer any questions the IRS might have only about the completion of this specific form, SS4.
So limited authority just for this form's processing.
Exactly. Their authority under this section terminates automatically once your EIN is assigned and released to you or them. You must fully complete the signature area within this section for this authorization to be valid.
And it gets us with this.
One interesting nuance. If the third-party designee's address or telephone number happens to be the same as the taxpayer's address or phone number listed earlier on the form, your application must be mailed or faxed. It cannot be submitted online using that designee.
A security measure.
Seems to be, yes.
No.
An IRS security check. And of course, the main signature section is where the appropriate party must sign and date the application.
Who signs depends on the entity type, right?
Correct. It could be the individual applicant themselves, the principal officer for a corporation, a responsible and authorized member or officer for a partnership or LLC or government entity, or the fiduciary, like the trustee or executor, for a trust or an estate. For foreign applicants, any duly authorized person can sign. It's absolutely crucial that the correct person signs to make the application valid.
It's good that the instructions clarify exactly who is authorized to sign for the various entity types. Makes it less ambiguous. And then there's the standard fine print at the end.
Yes, the Privacy Act and Paperwork Reduction Act notice, we don't need to go into huge detail, but it basically explains why the IRS collects all this information, how it's used, potential disclosures to other agencies, and the confidentiality provisions. It also gives an estimate of the time it takes to complete the form, including record keeping, learning the rules, and actually preparing and sending it.
A reminder that even official forms have a human element and take time.
Correct. It's a standard legal notice, but it reminds us that even a seemingly straightforward form like SS4 requires careful attention to detail and a definite time investment to get right.
We've truly taken a comprehensive deep dive into Form SS4 today. From understanding the sometimes surprising scenarios where you might need an EIN to meticulously walking through each and every line, hopefully you, our listeners, now have a much clearer, more confident picture of this absolutely essential tax document. It's no longer just a form, really. It's a foundational piece of your entity's identity with the IRS.
Absolutely. And if we connect this back to the bigger picture, mastering a form like SS4 isn't just about ticking a compliance box. It's really about confidently establishing your entity's tax identity with the IRS right from the very outset.
Right. Starting off on the right foot.
Getting this right removes a significant layer of potential complexity and confusion down the road. It allows you to focus your energy on your core activities, whatever they may be, knowing that your fundamental tax ID is correctly and securely established. It really sets the stage for smoother operations going forward.
Definitely sounds like time well spent getting it right. And remember, the irs.gov website, specifically irs.gov Form SS4, is your absolute best friend for the very latest instructions and to confirm any of the details we've covered today.
Always check the source.
And publications like Pub 15, The Employer's Tax Guide, Pub 538 on accounting periods and methods, and Pub 1635, which is specifically called Understanding Your EIN, are invaluable resources as you continue your journey.
They really are. And this whole discussion raises an important kind of follow-up question for you, our listener, to think about. Once you successfully obtain your EIN, how does this singular 9-digit number open new doors or perhaps impose responsibilities you might not have fully considered before?
Good question.
It's not merely a registration number. It truly marks the beginning of your entity's unique financial narrative with the government. It impacts everything from your ability to hire employees, open bank accounts, set up retirement plans, to filing highly specialized tax returns. So the question is, what new possibilities or responsibilities does obtaining an EIN specifically unlock for your particular situation, and how will you plan to navigate them?
That's a powerful thought to chew on indeed. What happens next after the number is assigned? Until our next deep dive, keep learning, keep asking questions, and stay well informed.